presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling and prowling with us.
Yeah, sure. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're, of course, watching the Tom O'Brien Show. I hope you've all had a good day so far. Let's take a look at what we got going on in the markets right now. You have the composite off about 0.69%, trading at 19,100. It wants that gap up area right at that 19,000 mark. Dow Jones Industrial off about 0.53%, trading at 43,721. You have the DXY, that dollar is strong, reaching that 107 area, trading right now at 106.94, up 0.33%. Crude oil itself up slightly, up 0.22% at 68.58. You have that E-mini off about 0.7%, trading at 5,974, so it is cracking that $6,000 level. Let's see, the Russell off about 1.67% at 2,342. Silver itself off about 0.56%, trading at $30.49. Gold's still getting smoked. So we're going to have Tim Ord on today in the second and third segment. See what he's kind of looking at, if this is cause for any major alarm going forward. But I mean, this is giving up, a lot of its gains here. We're getting back to, early September levels in gold as it stands right now. You have copper off about 0.15%, trading at $4.07. Let's see what else. We got anything else freaky? We have Tesla off about 5.33. That would have been the time to do the Tesla short. What is TSLS? It's going to be up 5.7% too. Yep, trading at 10.88. Well, how about that? Folks, today, right after the end of the show, I might cut this show a little bit short just so I can make sure everything runs properly. But if you go to TFNN.com, we do have the Basil subscriber webinar today. Again, that is for opening call subscribers only. Get in there, check it out. If you can't make it at 4 today Eastern time, that's totally all right. We're going to have it recorded and uploaded for you later. I believe we actually have Basil with us right now. Basil, are you there?
Wrapping up my presentation, so I thought, yes, appropriate time to look at the market. When we're looking at the Dow, and this is what I'm going to be discussing, that there's been a rotation through the different sectors. That very big spike that we had from the 4th and 5th of November, at this particular point, I still have to consider that's a breakout to the upside. But when I look at the action today, it makes it really important that selectivity is prime, because you've got certain sectors, certain stocks that have really accelerated to the upside, and just on a visual basis, let alone a technical basis, are just extremely overbought. So the way I'm looking at this right now is becoming more and more selective. We are still long our Bitcoin, because Bitcoin has been kind of one of the favorite areas. So that's really what I'm talking about, using tactical analysis. That's what I'll be going through to understand how you can put positions on and what to expect for them based on, remember I spoke about this cup and handle pattern that can go to a D. Then at that point, you've got to be somewhat careful. So that's the monthly chart. So it's still a much longer term look at because we're looking at monthly charts instead of dailies. I'm going to be going through all that. I'm going to go through why I'm starting to look at low price stocks, because we've got a number of pretty heavy positions on this moment. Why I want to look at the low price stocks, because if you can get something that's in a favorable area or sector, but you don't have to pay very much for it, this is the time to be using those vehicles as putting less money. I'm in a situation now that I'm starting to look at building up a cash position, even though we are already we have been favorably leaning towards this particular phase of the market. So the title is Sector Rotation, Sectors and Stocks for the Next Market Phase. And I think we've started looking at that next phase. And we're starting to see some sectors that are, you spoke about gold. We got out of our gold stock weeks ago because gold was just not looking, it wasn't acting very well. And the gold stocks were not acting as well as gold. And that to me was really important. I like to see the GDX, the gold miners, move much better than the gold stocks, and that usually helps the gold stocks to continue rallying. So this is, to me, something very important. And we've been long the dollar for a long time, and the dollar right now is at a recovery high. If you look at the monthly chart, and I'll be talking about that, it's not fantastic, but it has been leading to the upside, and now it's just about to get to a strong area of resistance. So we'll see how the dollar acts. We're going to look at the bonds to see are bonds ready at least for a rally attempt, because they've been, we talk about sector rotation. Bonds were at highs at about 102 in the TLT just a few weeks ago, and here it is at 90. Now, these are serious switches in patterns and the tide. I like to look at the tide. So that's basically what we're looking at this afternoon, what new positions we want to put on, what areas we want to look at, what was weak and has now been very strong, well, those areas that were like the COVID highs and then 80 to 90% declines that have now been coming back. Are these stocks, like a Shopify, are these stocks worth looking at right now?
Fantastic. And so, yeah, Basil, that is going to be today at 4 p.m. to 5:30 p.m. Eastern Time. We're going to get you right in there. So, folks, if you are an opening call subscriber, you should be tagged. For whatever reason you're not, just email me at Jacob@TFNN. But I made sure to get everyone in there. And, Basil, we're looking forward to it.
So am I. It's very exciting. I'm so pleased that this action happened today because it's clarifying a lot of things for me. It's very good.
Absolutely. Well, Basil, we will see you at 4 p.m. Eastern Time right here in the Discord, okay?
Thank you, Jacob.
Fantastic. So yeah, guys, again, really check this out. The only reason I've been driving on it all week is because he does these, maybe once every like 3, 4, or 5 months, right? And they are great every time. I get to sit there, just kind of watch, make sure everything is going well, and it is always very insightful. Again, that is Sector and Stocks for the Next Market Phase. And again, I want to say, if you are, let's say you've never subscribed, right, to the Opening Call newsletter, it's not a problem at all. We do have a 30-day money-back guarantee. So if you're listening to this on, let's say, YouTube, right? You kind of just stumbled across us because of the headline that we have on our YouTube channel. Well, 1, welcome. But 2, check this out. It's a 30-day money-back guarantee. If for whatever reason the newsletter doesn't work for you, you get access to this subscriber webinar and all of the other subscriber webinars beforehand. Again, if you want to get in, you're not sure how to, you're having some issues with it, email jacob@tfnn.com. I'm probably going to end, like I said, end this show a little bit early just so I can make sure we're all squared away if anything new has come in since I've been prepping for this. All right, let's take a look real quick. We only have about 45 seconds. We're going to get into the next segment. We're going to have Tim Ord on as well. But we have HIMS. HIMS getting smoked off 25.34%. The worst thing that could have happened to HIMS is essentially what just happened today, which was Amazon basically launching fixed purchasing for medical treatments. This is cause for alarm, and I don't know how you get out of that. Folks, stay right there. We'll be right back. We're gonna get Tim Ord of the Ord Oracle on.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are right now waiting to get Tim Ward on the line. In the meantime, let's talk right now. Again, HIMS off 24.35%. You had a lot of movement to the upside yesterday on the news that they released essentially a new software that would allow you to determine whether or not there's GLP-1 drug shortages. That was more of a way to try to combat in some strange way the FDA, right? Who were taking off the drugs that HIMS was compounding, even though there was still shortages out there. That probably was done via pressure from a lot of those large companies, Novo Nordisk in particular, but Eli Lilly did it as well for tirzepatide. This is not a dip time, right? This is actually a pretty large sell-off for the company. We're off 24% right now, trading at $20.97. And this is because Amazon is launching a similar service to HIMS. And you can't compete with Amazon on that, right? So that's from One Medical. That's essentially how they're doing it. They acquired the company One Medical. I mean, let's see, yeah. So Prime members, this is what it's going to be from Amazon. This is why it's so bad for HIMS, right? So Prime members can see the cost of a telehealth visit and their desired treatment before they decide to proceed with the care for 5 common issues. Patients can access for anti-aging skincare starting at $10 a month. Motion sickness for $2 per use. Other health ones for $19 a month, and men's hair loss for $16. So, that's huge for HIMS, right? This isn't even necessarily having to do with the GLP-1. This is all the other stuff that HIMS is doing, right? While their GLP-1 compounding kind of segment is under essentially bombardment. So really tough situation for HIMS. I don't know kind of how you position yourself from here. Are you able to compete at that kind of level? I mean, not really. It essentially makes them have to go and develop new lines of revenue. But the problem is that can only last so long until, let's say, Amazon expands out further from that. So HIMS is now starting to look, honestly, fundamentally unattractive in that capacity. Anyways, tough scene for HIMS for sure. Let's look at Qubit actually quickly. You know what? Instead of doing that, let's go over to our man Tim Ord. Now, Tim Ord comes on every Tuesday and Thursday. It is, of course, Thursday today. If you want to see more from Tim, you can go to ord-oracle.com. Of course, if you go to TFNN.com, you can go right over to the Services tab. Tim has 2 fantastic lecture series. It's The Secret Science of Market Tops and then 6 Secret Ratios every trader should know with Tim Ord. Tim, we have the E-mini coming down a little bit. We have gold reversing back to September, prices. What are we looking at today?
Well, let's start looking at the S&Ps, or we can start with gold, either one. But let's look at the S&Ps.
Yeah, let's do that.
We'll start there. And this chart goes back to 2019, and it's actually the weekly SPX. And I got some blue shaded areas there, or green shaded areas there, and kind of a pink shaded areas. What I really want to point out here, on your show, I talked a lot of times, this is a weekly chart. When the S&P is making higher highs and the SPX ratio, which is the second window up from the bottom, making lower highs, that's a bearish combination, I guess. And it has picked out intermediate term highs in the past. And what I want to point out is 2 times that it did not. So if you look back in late 2020, I got a shaded pink area. It's actually where I have a square, blue square.
Yes.
If you see that.
Yep.
Well, anyhow, the S&Ps were going up, it looks like about into October, November. And the SPX was kind of just actually going sideways here. So that was kind of a bearish divergence. Then later on in that month, the SPX, or the SPX VIX ratio made a higher high along with the SPY, so it negated that bearish signal.
Right.
And if we go in the current time frame, which is the current squared, blue squared, we kind of had a bearish situation started basically in July, and it lasted into early, or actually probably late October, where the ratio, SPX ratio, is going lower and the SPX is going higher. That's a bearish divergence. Well, right around the election time frame, the SPX, which is way far to the right window, I have it kind of blown up there.
Yep.
The ratio makes higher highs along with the S&Ps. That negates that bearish setup. So that's one of the reasons why I kind of stood out on that last rally up, because I wanted to see what was going to happen to the SPX VIX ratio. I'm back long now because everything's back into bullish territory, where the VIX is back down being low again, and the market's making new highs. There's nothing bearish about that. But I also want to talk about a little bit on the bottom window there is just the VIX. VIX, a lot of times, anything below 17, a lot of times the market goes into a trending mode.
I see.
And if you go back in history, if that VIX really stays low below 17, a lot of times the market is persistently up. And when I made this chart, we're at 13.99. So we're kind of probably back into a trending market, similar to what happened beginning of the year of this year, and into that July time frame, kind of stayed low, and the market kind of just kept working higher. So I'm thinking that's probably what's going to go happen here. But once the market kind of feels that a decline come, that VIX will rise, and it's not doing that here. So I think intermediate term wise, it looks pretty good for the market going into year end. We can flip to chart 2.
Yep.
Kind of a short term view. This chart was made, I don't know, a couple hours ago, whatever, and kind of a blow up view here. If you look at the top window is the SPY, and over the last 4 days, the market kind of had a minor pullback, or actually the last 3 days counting today have kind of a minor pullback. If you look at the VIX, which is that shaded green area, as the VIX keeps making lower lows here, that's usually a bullish sign short term. So if the VIX were rising and the S&Ps were declining, that would imply the market, or the SPY, is still going to pull back more. Here we don't have that. The VIX, as the market's kind of pulling back, actually making minor lower lows, the VIX is actually making lower lows. So it's kind of a bullish sign. So this pullback is probably just a minor consolidation and an uptrend. And if you look going into, I think it was Monday, we're up 5 days in a row. So Monday to Monday, previous Monday to current Monday,
right,
market was up 5 days in a row. That predicts the market will be higher within 5 days, 73% of the time. So this adds weight to this minor pullback we're having here. This is no top of any consequence, but probably a lot of times midpoint of a next move up. So, and there's a gap below us. I didn't actually shade it out to really point it out. There's a big gap. I think that's a breakaway gap.
I see.
And breakaway gaps a lot of times don't get filled. The midpoint gaps and exhaustion gaps do, but the breakaway gaps a lot of times don't. So I don't think even that gap may not get filled. But we do have support at previous highs, which is around 585. That's about the worst case scenario.
Okay.
That may happen. We may not even pull back there, but trends up.
Fantastic.
So,
yeah, Tim, stay right there. Folks, we'll be right back with Tim Ord of the Ord Oracle right after this short break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Before we went to the break, looking at some SPY charts. Essentially, right, if I summarize that correctly, there may be some bearish signals, but they're negated by overall kind of bullish signals, and we're still bullish in the SPY at least.
Right. Yeah, we're still bullish here. Let's flip to chart. Yeah. So chart 2, kind of confirms that because the VIX is making lower lows, even though the SPY is not making higher highs yet.
I see.
But anyhow, the SPX VIX ratio is making higher highs. So anyhow, the VIX is showing bullish signs. If the market was going down, the VIX was going up. That would kind of say that the market keeps going to keep going down, but that's not happening here. VIX is actually still making lower lows, even though the SP is making lower lows. That's a bullish divergence. So let's look at another chart to kind of confirm. I usually try to use as many indicators on a chart to give the confirmation, because not all the indicators work all the time. But if you get 2 or 3 indicators saying the same thing, it adds the weight to the signal, I guess you might say.
Totally.
So anyhow, chart 3 is a kind of a different. It's still the SPY, but the top window is the SPY tilt ratio. So it's the equity market to the bond market. And if you notice, I got green areas, shaded green areas, and I got shaded pink areas in there. And a lot of times, the SPY tilt ratio will actually start going down before the market goes down. If you look back in July of this year, the market kind of rallied into mid-July. If you notice, the ratio, which is the top window of the SPY tilt ratio, made lower highs. So that was my big warning. That's the reason why I got out in July, plus some other indicators, that this might be a bigger high than anticipated. And the market did pull back. But we did have a minor kind of beginning of end of October, first part of November. That ratio was kind of going down, kind of worried me a little bit. We did get long, actually, a couple of days before the bottom, which I wish you would have waited. But anyhow, I didn't. But right now, we're back into the green area. The market is making higher highs, and this ratio is making higher highs, even though over the last several days, last 3 days, the market has pulled back a little bit, but this ratio has made higher highs. So that gives you actually additional confirmation that this mild consolidation on pullback is probably just that, just a mild consolidation. And a lot of times these mild consolidations mark the halfway point of the next move up. I haven't done the calculations yet, but we're basically 600 was the top in 570 area, so you had 30 points on 600 or so. You're up around 620, 630 for the next high, or potential high. So, which is quite a ways up from where we are. So that's at least another 4 or 5%, give or take. Yeah. So we got more to come to the upside. So equity market looks pretty good to me. I'm not seeing anything real bearish. The bottom window again is the 5 days up going into Monday. That predicts the market will be higher within 5 days. 73% of the time kind of adds to the bullish situation. So not seeing any problems yet. I think in general we work higher until year end. So anyhow, any questions?
No, not on the equity. I'm looking forward as well to getting into gold and see what we got going on. Is that chart 4 we have? Oh, we have SPY. We still have the one for the Bollinger Band on SPY, which is definitely interesting to see that too.
I meant to delete that. So let's just let's go skip. I kind of overlay the previous week's or previous webinar.
Sure.
Let's go to chart 5 then.
Perfect. Got it up right now.
All right, this is going to be real interesting. What's going on here? The second window down from the top is the daily inflation-deflation ratio. Top window is the RSI for that ratio, and right now the RSI gets around the 30 range. Sometimes it breaks 30, sometimes it doesn't quite get to 30, but right around 30 range. A lot of times when that RSI for that inflation-deflation ratio gets that low, you're at a bottom, and those red vertical lines, dotted vertical lines, I guess you might say, are times when that ratio got there. And they all most of them, this chart goes back, about 2.5 years. It's not a perfect indicator. but when it does develop, I pay attention. And so we're probably right smack at a low in this vicinity. This is one indicator that's, in my opinion, is bullish, I guess. Is it today the low? Maybe not today, maybe tomorrow, but it's within the vicinity of the low because the RSI is so low.
Right.
So let's look at another indicator. Let's go on to chart 6. And now this is on top of chart 5. So chart 5 is in bullish territory. So chart 6 is another indicator that works really well. Top window is GDX with this Bollinger Band. Next window down is GDX up-down volume. That's a cumulative up-down volume for GDX. And next window lower, that'd be the third window down from the top, is GDX cumulative advanced decline. And the bottom window is the GDX-GLD ratio. And so every time when 3 of the 4 indexes hit above the upper Bollinger Band or below the Bollinger Band, expect a reversal. And if you notice, the blue lines are when it hit above 3 of the 4, or even all 4 of them hit on the upper Bollinger Band, and it picked out those last highs going up. And this is the first time since going back to, looks like about February of this year, that it finally got down below the lower Bollinger Band. So that's that kind of a green area I shaded in there. And all 4 are below the Bollinger Band. So the market is kind of stretched too far. The Bollinger Bands are kind of, it's actually 2 deviations away from the norm. And the norm is that dotted line in the middle. So if the market stretches too fast, too far away from that norm, usually you'll have a snapback rally, and that's what this indicator is saying. So you got all 4 indicators that says the market's gone down too quick, along with the previous indicator, which was that inflation-deflation ratio. So you got pretty good odds that you're probably looking at the lows right in this vicinity on GDX.
Right.
So actually, time's going to run out here.
Well, we can
go on for another one.
Yeah, we'll go on for another segment. Just kind of discuss a little bit before we get to the break here. Well, I guess we have about 1 second before the music comes. Tim, stay right there, folks. We're back with Tim Ord of the Ord Oracle after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Schub. I'm joined right now by Tim Ord of the Ord Oracle. We were just going over some charts on the GDX. Tim, I believe we were on the, this is the last chart here.
Actually, let's go back to chart 6, the one.
Perfect.
And we'll talk a little bit about that. But we kind of just stayed long. I didn't really see a reason to get out other than if you're a short-term trader. But I didn't think we'd pull back this far. It's kind of hard to say what the consolidation would look back. But anyhow, we're back to two different type indicators, which is, chart 5, chart 6, which is chart 6, are on buy signals. So you got two different methods saying the same thing. And the reason why I kind of stayed with the position is basically chart 7.
Okay.
And this is the main meat of the project here, or main meat. This is the monthly top windows GDX on a monthly time frame. Next window down is the cumulative monthly advanced decline. Bottom window is a cumulative up-down volume. And this is the main indicator that kind of rules all the indicators, I guess. Even though short term, a lot of these indicators will flip back and forth buy and sell signals, but this indicator gave a buy signal back in May of 2000 or this year, and most signals of this type last a year and a half, if not longer. So I think in general we'll have some consolidation long in GDX, but as long as this indicator stays on a buy signal, I probably should describe what a buy signal is, but then I'm going to stay with the long position, because what's going to happen going forward is probably a rotation. There'll be rotation, and some stocks that led the way will take consolidations. The ones that haven't started rallying yet or start to rally. And so this probably process will take another year, if not even a couple of years. But the buy signals are generated by crossing the mid-Bollinger Band on both those indicators, and both of them did back, which is the blue circle, back in May of this year. So even though we backed off some here, the bigger trend is up. So we haven't finished the rally. I think we'll probably bust through. If you go back up to GDX, which is the top window, yep. I got a section there that's shaded, kind of a brown or yellow shaded area. Yeah. That's the resistance zone. We got up into the resistance zone. We did back away. And we are also basically testing the high of 2020, which is right around that 40-45 range. So this is one test. The more times you test the resistance zone, the more times you're likely to break through it. So eventually we're going to break through that resistance zone. It looks like between 40 to 47 or something like that. This pattern that's been going on since 2020, it was a head and shoulders pattern. That pattern had an upside target around 45, which we pretty much hit. I think we hit around 44, close enough. But now, since we hit 44, you measure the top of the 44 to the bottom of where the head is, which is around 20. You got 20 points. You add it on to 40, 40 range. You come up with 60, which is basically 2011 highs. That's ultimately where we're going to go. How fast we're going to get there, don't know. If we get there in the next few months, then that 60 probably won't hold and we'll probably head much higher. But if it takes another year to get to 60, which I don't think is going to happen because we're in an impulse wave, then I think we'll probably exceed 60. But right now, 60 is on my radar. You know, the head and shoulders pattern has been met. And now I think they open the door for 60 to be the next target, which is basically a 2011 high. So we'll have a consolidation wave, but, you know, this rally has started. It's still fairly early in the process, I guess you might say. We got a ways and time and price to go yet. So,
well, Tim,
I'm bullish.
Fantastic as always. Thank you so much for coming on, Tim. It was great having you. We'll see you Tuesday then. See if anything else develops in the market until then. But yeah, guys, if you want to see more from Tim Ord, you go right over to the ord-oracle.com. Additionally, go over to the services tab. We have the secret science of market tops with Tim Ord and secret ratios. Every trader should know with Tim Ord. Tim, thank you so much. We'll see you Tuesday.
All right. Thank you.
Great, folks. All right, let's look at a little bit of stuff. I'm going to end this segment short here pretty soon, just so I can get everything set up for Basil's webinar. Again, check it in. If for whatever reason you don't see something, email me at jacob@tfnn.com. Cisco, man, these guys. I'm glad I didn't end up actually taking a position. I kind of convinced myself out of it, just kind of like reading more what they had been doing the past year at least, and seeing. My hope for this is like, you get in there, you can hold this stuff, it maintains its price. Okay, that's it, right? I had this idea that with the recovery that we're supposed to be seeing, right, in networking, I spoke about this at length yesterday, right? Basically using security within containerization, which is a company they acquired, does that. They didn't speak about that at all. All I see is headlines all day trying to convince people how, no, Cisco's upside is huge, but what I see from them is that they're actually not really going to grow at any capacity over this fiscal year, which is not really necessarily great. They did the upper end of their guidance, which is nice, right? Basically for fiscal year Q4, for Q4 fiscal year 2024, they had 14% year-over-year growth, but only 6% growth excluding Splunk. So I'm not really sure what the defense is for Cisco in this circumstance, right? They're not growing in any major capacity, right? And this is for their forward guidance. Their total, fiscal year 2025 would basically see them make roughly the same amount they made quarter over quarter. So this doesn't look that appealing unless you just kind of want to keep in something that's going to maintain its value. If you're looking, we have this cowboy market right now. If you're looking for things that like run up super high, 30, 40%, you sell it the next day or 2 days from then, obviously Cisco is not the thing. Anyways, that's my thought on it. Folks, thank you so much for joining me today. Our producer is going to get, I believe, Steve Rhodes' show from 11 a.m. on today to kind of finish out the day. If you want to get in to opening call subscriber webinar, again, there is still time to do that. You just go right over the newsletters tab, subscribe right here to the opening call newsletter by Basil Chapman. Send me an email. We're going to get you in. It's going to be very quick. We will see you tomorrow.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget
us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So LB is looking for an entry point into Palantir. So I've pulled open the chart here of consecutive days higher and lower. Lowers are the ones that are in red out there. And I'd love to say there was something consistent here, but there's not. You know, we had a 3-bar pullback in August. We had a 5-bar pullback in August as well. We had a 2-bar pullback, which is what you typically like to see in September. Then we had a 4-bar pullback out here in October. We had another 3-bar pullback in October. We're only in bar number 1 of a pullback out here. So you're looking for a buy point where the daily and the weekly and the monthly are all bullish out here. I would say look to that 56.71 area. 55.77 to 56.71 would be the area that I'd be looking at. And you want to see some kind of bottoming pattern on a 30-minute time frame chart such as this here, or maybe it doesn't have to be 30. It could be 60. It could be 65, could even be 15. But here we've got a negated TD9 count bottom pattern on the 30-minute time frame chart. So, but you want to try to put that together. Short-term signals. In fact, we take a look at gold. Here's how you want to try to put it together. Doesn't mean that the trade is going to work, but you're looking for, look, what we're doing is we're doing price discovery. And so let me get to this gold chart here. So the daily gold chart's got that TD9 count bottom. As it was forming that bottom, there were several bottoming patterns out there. Those failed overnight, by the way, but there's new ones ones that are in place out here. So, for example, you've got to buy the D-point pattern, the 240-minute chart. 25.91 is its price target. But let me get to what's really important right now. And that's this. We got to watch what takes place on this first retracement here. We should get a retracement because we had a TD9 count top that completed on a 30-minute time frame at 11:30. What price should do is pull back to test support. And support would be at about 25.65 out there. It could be down at 25.58, but that first level support, 25.65. The 10-minute time frame has a TD9 count top. Price right now is trading with inside its profile, below its oscillator and change line. If 4 minutes from now it is trading below 25.78, then its buy zone would be 25.73 to 25.74. So there was all these bottoming signals out here. Now that we've gotten to a level on a time frame where there's topping patterns, now it's time to watch what does price do and does it find support. If it does find support in those areas, then it could rally from there. And that's the end of the show, folks. I won't be here tomorrow, but we'll be back Monday at the normal programming time. Have a fantastic Thursday and weekend. Take care.